All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for June the 13th. It's Monday. We are in the throes of summer. We are in the sell and may go away the last 3 days in our market. And I'm going to put in there our S&P 500 so we can look at it. I've got this same email from a couple different people on number one. Received a phone message from Steve Brown today, and actually it's been happening since last week. Wanting to know what E-Trade could do to earn me back. I don't know anybody from E-Trade. I did not call him back. I figured you and Keith should answer this question if you desire. Thank you very much. About 4 of you have had this call, and what this is called, plain and simple, this is, let's see if I can get this. This is Morgan Stanley trying to poach clientele. So that's all that's happening right here is they're going back and they're saying, hey, you used to be with this guy, used to be with us, how can we earn your business back? We have been told that it's not aggressive. They just saw that you guys left, so it goes back to their normal, hey, we lost a client, what could we do? And I don't know, I call it poaching clients. So that's where we stand. The second thing, will we be impacted by the $187 million settlement from Schwab? SEC charges that they misled advisor clients on fees. So I wish, really the good thing on this one is I wish. But no, we will not be affected by the settlement, nor are we eligible to receive any of it because we did not have Schwab Advisor Services managing our accounts under their, and watch how I'm going to say this, proprietary there we go, robo service algorithm. So the short answer is on that one, no one here was paying them 1% for a predetermined buy and sell algorithm to basically hose them. If you'll notice, the 1.87 million won't cover the 2-point-something trillion that the algorithm actually lost. So what has happened in this for Schwab is they went through an algorithm, they were buying and selling through a stopgap type of buy and sell or using stops. And basically these funds lost roughly 40% of their balance, or just over $2 trillion. And so they're trying to get some money back from them. The clientele that went to the robo trading agreed to it, so they really can't get their money back that was lost to them. They agreed upon it. It's all in writing, but apparently the fees were basically double dipping. This they got caught, and what they were putting them in and out of was churning them into some funds that they would get like a commission fee and a commission fee and a commission fee again. So the good news is your advisor, Hurley Investments, was not doing that, and we don't use a robo service. We make our decisions independent, and we're not eligible because you weren't in this scheme or this scam. Does that answer the questions for those of you that asked those two questions? I know some of you were in different parts of that, but for a couple of you that asked those questions, does that answer it for you? I'm going to give you guys a second in regards to that. Thank you. So I just saw 2 yeses. Jim, I was actually hoping you were the first one that would pull that up. And Dave and Justin, yep. I hope that answers your question on both of those as well. Okay, let's go to my son, Jared. So for those of you that have asked, Saturday, Jared was doing parkour. I don't know how to spell that. Boy, you think I'd have a better job and have this ready, right? Let's see. Parkour is not it. There we go. Parkour, which is flipping and tricking is what they call it now. And here's the short answer for all of those of you who have given me your thoughts and prayers. I appreciate it. But he was trying to show off for some friends Saturday morning down at Brigham Young University. The short answer is in his trick. So no, we're not going to be suing BYU. It was completely my son's fault. In his trick, he caught his foot on the railing and fell 20 feet-ish on his head to the cement. One of the worst things he did in doing this was he bounced. He hit hard enough, and the degree or angle of his head on the ground pushed his body up off the ground about 1.5 feet, and it rolled over. I appreciate everyone's love and support and prayers. The short answer is the left side of skull is crushed. On the Glasgow scale, he is started out at a 3, moved to a 5 as of yesterday. Crushed the right orbital, and we're gonna wait and see if he has sight in his eye. As of right now, his eye is not. It's not. The pupil is not dilating with light. The good news is, but it didn't, and this is the highly technical term, pop off the retina. I don't know, Maud, what's it called? The retina nerve. What else did my son do? Broken neck. 2 vertebrae. Boy. Maud, I actually need you to come out here, or Babu, I need you guys to come out here and type this in. 2 vertebrae. Broken with leaking spinal fluid. The cerebral spinal fluid, so I call what, the CSF, leaking out of skull, nose, ear, eyes, mouth. Broken back, 2 vertebrae. Left lung collapsed. They have the chest tube, and they have him on a ventilator. Left lung got back to full inflation. He's fine. He has stopped breathing for a couple times, but we're okay. 7 ribs detached from the, and if I'm saying any of this wrong, Babu and Mod, please help me out. Their thoracic spine, just severed them right off. Broken wrist and radial arm bone, right hand. Still scheduled for a still scheduled for his craniotomy in the near future. If the swelling approaches, and I'm probably saying this wrong, approaches the 20 millimeter mark. So that was my last week, and that is why I did not teach last Monday. And it's kind of funny because, is Bill here today? There it is. I love Bill. Bill's known me for forever. Boy, he gives me some crap back and forth. Bill asked and said, take the week off. To where my reply is, I can't, because it's my money too. So what we are doing, just as a heads up, back to my deputy sheriff days, I was doing nights. I end up taking a nap somewhere between, usually it's about 1 o'clock my time till 6 or 7. I then spend the night up, and I am at the hospital. Great trauma unit, great neurological unit. These guys are amazing. It is the Provo, Utah Valley Hospital. In fact, just to give you guys a heads up, they were exactly 8 minutes and 12 seconds, if you follow the typical rules, 8 minutes and 12 seconds from BYU to get to the hospital. From my house or my neighborhood where I was at when my wife called me in the morning, I was about 38 and a half minutes, and I beat the ambulance to the hospital. The short answer is my family's gone through a little bit of trauma. It kind of sucks that I kind of wish I was talking to youth, right? Kids, the kids that think, well, it's my choice and it's my life and it doesn't affect anyone but me. My family is learning through Jared that that is not true. That kids' choices, they affect everyone. And I think that goes in line with the trading, right? The trading and what's going on. It has been 2 weeks since Hurley Investments mentioned the drop we are expecting due to higher interest rate hikes. And this is out to the June 14th/15th. This is out to the June 14th/15th rate hike meeting that we're going to have on this Wednesday. Last Monday, we started protecting positions in an upward moving market. And I just have some comments here because I'm pretty sure, so I'm going to say Monday, right? Monday S&P was up. What were they up? 0.3? Nope. 0.3. And we had protection on Apple. Tuesday, S&P was up 0.9, and we added protection on Baidu. Wednesday, S&P was down 1.02. I don't think we did anything. Thursday, the S&P kind of hit the crapper, right? Down 2.37. And we protected Disney. Boy, I don't have Keeve's stuff right here in front of me, but we were talking about it and we started doing this early. We were protecting so Disney, Bank of America, Facebook. Starbucks, and I think Under Armour. And then Friday, we finished with Visa, Ford, Bank of America, and JP Morgan. And so we were ahead of the curve. Under Armour, I think actually what we did is we rolled because we had Under Armour protected technically on Monday down at the $10 strike price. And so I think we rolled. But the good news is, and I guess how I'm going to say it, in the last 3 days, we have the S&P down negative 2.37, negative 2.91, and today we have a negative 3.88. So I'm just going to do a quick little calculation on all those that says 237 plus 291 plus 388. We're basically down 9.16 in 3 days. And I'm just going to say in general, Hurley Investments, as it's all pulled together, so I don't have individual accounts to tell you, but Hurley Investments in general is down 3.91 to 4.13. So we're making up over half of it. And the biggest question I've been getting is, and I think it's funny, but you guys have every right to ask, what more can we do? And for today, we started back to adding an additional put contract per 5 contracts of puts. So if you have 1 to 5 contracts of puts, we added an extra one. If you had 5 to 10 contracts, we added 2. If you had 10 to 15 contracts protecting your stock ownership, we added 3. But basically what we're doing is we're sprinkling more puts than shares of stock to make more money to the downside. For a couple accounts that are in, a couple accounts that are still over at E-Trade, we did some short calls that we were taking profits on, and we'll do more sprinkling of puts tomorrow in those accounts. A couple people asked, Kevin, why didn't you do full caller trades 2 weeks ago? Which is a valid question, right? If I'm sitting here telling you guys, hey, we're expecting a big fall, why don't you protect everything so we, right out of the gates, maybe make up 80% of the downward movement instead of 50? Why didn't you put on short calls and cap the upside opportunity so that we could make 90% down 2 or 3 days later, or, you know, at the 9.16% downward movement, why didn't we, you know, why aren't you only down 2% instead of 4, right? Why didn't you do a better job of capping is what I'm getting asked, because I made the comment and I was fully aware that we expected downward movement prior to the Fed's announcement on Wednesday. And it's really a short answer. I didn't, because I could have been wrong. So I didn't fully collar everything, because if I was wrong, and I was a little worried because last week it really wasn't until Thursday, Friday. The week before we had a positive up S&P 500 week. So I know some people are saying, well, Kevin, you said we're expecting this drop and then you took protection off for a week and you let it run. And we almost doubled the S&P growth 2 weeks ago, right? Last week we did pretty good. We beat the S&P by about 3.8%, which is really close to 3.88 today. And then we did really good today, making up over 2/3 of the downward movement. So the big question is, why didn't you? Well, I didn't because we had a big week where the S&P was up a little over 2%. And I wanted us to be up 4%. I didn't because we didn't see those signals in the market like Thursday. But I was seeing them on some individual stocks like Apple and Under Armour that we just put protection on. So in real life, I didn't because our markets were still going up, and if I was wrong, we would have missed out on that upside growth. So that's why we didn't start protecting earlier, even though I said so 2 weeks ago. We just, man, I can't be wrong and have you capped when we're expecting a rebound. So the next question I get is, how much farther are we going to go? Because right now we are in bear market territory, or that's being down, what? S&P 500 down 20%. So the question is, territory, Hurry. Come on. Thank you. How much farther are we going to go? And this is an interesting one. This is one that I am going to run to a couple different charts. We always start off at the 6 month. We want the most recent information on how far we can go. And just looking at our chart here, the simplest or easiest way to make a comment really comes down to we've already broken below the lows of 38.10. Our next stop is most likely 35.86. So we still have another 170 to go. And 170 on 3,500, 3,700, we roughly have another 5%. Good news is 32.10, we're only 2.1 points away from being oversold on the S&P. We are oversold on Williams percent R, so big money is ready to put more money to use, which we didn't see, which I found interesting. We didn't see on a quarterly month on June, a yearly quarterly month. We haven't yet seen the big buy-in into June. We had a little bit of buy-in, kind of sporadic, right? Down day, up day, couple down days, up day. We didn't see the purchasing of new money going into funds yet into June, which I would expect that is available somewhere. I don't know where it's at because normally those funds have to be invested for people to get paid on. Maybe for the first time in history, we're seeing big money be a little slow at throwing their money in and fully investing people into the market. So right now, the first stop is going to be 35.86. When we were looking at our positions and, hey, why are you doing things? Why didn't you just protect everything? We basically were looking at positions and we're like, hey, Apple, right? Apple's breaking that 148, 149. That's why we added it on weeks ago. Well, week and a half ago, right? Because we were looking at Apple right here. So that's why we got into Apple out of the money down at 145 because it was trying to hold at previous highs. That's why we protected Apple right there. Baidu, we were trying to protect Baidu at the 148. And let me go to Baidu because it's an interesting one. Baidu, we saw it bounce up to that 200-day. So we knew where our level was. For Baidu, we spent 1, 2, 3, 4, 5, 6 days. 1, 2, 3, 4, 5, 6, 7, 8 days. Man, I knew it felt longer than that. Seeing if Baidu was going to break the 200-day longer-term simple moving average. 148 was our number. We got in at 145 out of the money on the first down day there. And thank goodness, because we're all the way down to 131. So all we're doing is looking at individual stocks and positions and trying to find out, hey, where are we going to go? Well, Kevin, you haven't yet sprinkled in extra puts on Baidu. Correct. We're now waiting for the 50-day and the pivot point. Our 50-day is at 128.72. Our pivot point is at 129.65. If we see Under Armour break the 128 level, it's going to trigger us putting some extra puts in for Baidu. Because the low side 101, 102. We have the 110, 114 range where we have some a little bit of support, maybe a one-time support at 105 for a previous pivot point. That's how we're looking at things, and that's how we're deciding what we're going to do. My expectation is our market will overreact to a rate hike. So my expectation is an overreaction to the rate hike, which means we will definitely lose another 5%, and then we should begin another slow upward climb. And people are saying, well, Kevin, for crying out loud, how can you make those comments? Where are your thoughts at? What are you doing? So let me get those in here. Guys, it's been a hectic week for me. Not that that justifies anything, because hectic week or not, you want your portfolios protected. I want my portfolios protected. What I mean to a certain degree, and this is the Dow, technically we are now bearish. Our Dow did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It was a 14-day climb. It was a 3-day drop. That coincides with how rate hikes typically work. I mean, for crying out loud, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. We had a 24-day building a real nice base in between two big moving averages, the 200-day and the 50-day. The rate hike came and boom, it broke through it in one day. 24 days to build a support level, one rate hike, and down it went. And the next 24 days, pretty pathetic, right? Very easily lost 10%. So this is how I'm coming up with what we're looking at and where my expectations are. I'm not just guessing. I'm looking at, hey, here's what it did in the past. Here's why it did it. I can track that also to the S&P 500, but the S&P 500 had a little more run on it, but it mirrors the Dow Jones Industrial Average. Kevin, you said the next week it's probably going to go down. I'm using this 5-day period where we were negative, the most recent 5-day reaction to our market, as my same expectation for our next 5-day reaction to our market. That is how I'm coming up with that same 5%, or how many days we're looking to go down. And it's not rocket science, it's just what I do. All right. Nothing's happening this week except for the rate market, FOMC rate decision on Wednesday. That'll be a washout most likely. I do have a couple of interesting articles here, but the most important article I wanted to show you guys is a Warren Buffett disciple. It should say Kevin Hurley. I don't know who Manesh Pabri is, but I found it very interesting. that exactly explains what we do here. We focus on the fundamentals. Even though we're in some positions that are down, we have fundamentally run our numbers. You can go back to the January 10th Hurley Investments commentary. We look at those fundamental numbers, and everything we did is number 1, 2, and 3 that this guy supposedly does. We run the fundamentals. We make sure it's not in debt, that it's in line with the earnings per share, the return on investment, return on equity, return on assets. We do all those number crunching to say, hey, is it a good stock? We make sure that not all stocks are good buys. And really the most interesting thing here, so I don't fall into a value trap, comes due to free cash on hand. If a company doesn't have free cash on hand, it is most likely deemed a value trap. And you don't want to be in a cheap stock that's a value trap. Ford has been borderline that, but it hasn't. And how to evaluate a company, there are tons of different ways to do it. He lists a couple, from PEs to returns on equity to what I just said. I think somewhere in here is cash on hand, reinvestment of cash. So I just want you guys to understand what we're looking at. And then Stanley Druckenmiller says the bear market is a ways to run as a recession is in the cards. I do think we have a ways to run on the bear market, but I am disagreeing with him because there's no recession that's looming in the near future. And if I was to ask you guys really quickly, what is a recession? Going back to junior high school, right? How do we define a recession? That is a question to you guys. I'm trying to stall so that I can find what I'm looking for. But I want you guys to define to me, what is a recession? So we both agree and we're on the same page and so forth. Oh, come on. Really? Those are third estimates. I want the real thing. Where's my GDP? Where's my GDP? Trying to find it so I can show it to you guys. Huh. Don't want a ticker, I want a GDP. All right, let's US monthly GDP historical data. There's the real GDP. I just want the one's the Federal Reserve. The real one already says we're in a recession. So well, I'm not able to find what I was trying to show you. But the short answer is a recession is 2 consecutive quarters of a decrease, a negative GDP growth. And we're not there. In fact, we haven't even had one quarter yet. We'll see where we end up in June, but we need to lose like 3% in June GDP to have a negative quarter. Here's what I'm going to say, and I'm going to say it tongue in cheek. If we get through June with being negative less than 3%, we'll have a positive second quarter GDP. And having a positive second quarter GDP, it's almost impossible for a negative GDP quarter through the end of the year, meaning through Christmas. The US general public is so greedy. I still remember back in 2008, hey, I'm going to lose my house, but I'm going to buy my kid an iPhone. And I kind of scratched my head saying, you're going to buy your kid an iPhone when you could use that same money and pay for your mortgage? What the hell are you doing? Well, Kevin, it's been really important to my kid. And I'm like, it's more important to have an iPhone than a house to live in? I don't understand that mentality. But because of that mentality, I believe it's been, and I can't prove it yet. I'm still trying to do my research. I've been caught up in hospital crap. I have been unable to find it, but it's been like 60 years since we had a negative GDP in the fourth quarter. That even goes back to 2008. From the research I was doing, we still had a positive GDP quarter in 2008, for crying out loud, because people were buying their kids freaking iPhones instead of making a housing payment or a mortgage payment. So the short answer is, I don't see us being in a recession this year, at least a defined recession, because companies are still selling. We're not going to have a second quarter. It'd be next to impossible to have a second quarter GDP negative number. We'll probably have a negative GDP this coming quarter, July, August, September, but it'd be really hard to have an October, November, December negative GDP read, because we're a gluttonous people and we buy a crap ton of stuff for Christmas so that our loved ones get iPhones even though we can't make a mortgage payment. So with that said, I've included Druckenmiller's information here. I see where he's trying to go with it, but the numbers don't make sense yet. It's probably a 2023 first and second quarter recession, and it'll last into the third quarter of next year, which is scary, because if we do lose 25-30% this year, we probably have another 20%, 30% next year as well. With that said, let me go to, what questions do you guys have? What questions do you guys have that I can do some type of answering for you, so that you know what your money's doing? And Dave, I knew you were going to bring that up. You had that just setting and ready to send off to us. So the question is, when do we flip the switch? Which I think is funny you said it that way, Dave. When do we flip the switch to make more to the downside than we are losing? Which is a great answer, and I'm going to try to answer this a couple different ways. There is no one size fits all, and that's a problem with education. It's the problem with algorithms. It's the problem with any dumbass that tells you guys, hey, you just do this and you always make money. That is not true. There is no one size fits all. There's no rule. There's no set rule that you follow every time. So the short answer on what you're asking there, Dave, is going to be this. So we expect at Hurley Investments to make up the next 5% of downside movement. And we might lose a little as that downside starts for 5% and make it up the last 2% of that 5% drop as we continue to add and sprinkle extra long puts in place to make up more going to the downside. So does that answer your question there, Dave? And anyone else? Actually, the only question I saw come in was Dave, unless that was Jim. 2 consecutive quarters of negative GDP is deemed a recession, but you have to have those 2 quarters. I don't see us having a negative GDP for the quarter we're in right now, April, May, June. I definitely see it July, August, September, but it would surprise me if we had a negative October, November, December. We go back to Vietnam War Decembers on a negative GDP during that time frame. Even the dot bombs of 2000 didn't have a negative GDP number for the last quarter. Okay, I don't see anything else coming in. I will appreciate you guys in your prayers for my boy. Thank you so much for those of you that have already reached out. We're on day 10, I think day 10 was the day that we're on right now for him. And Mom's day 10, just so I don't sound too negative here. Mom's day 10 was calm and relaxing night for Jared. No change is keeping the status quo and letting his brain heal. Next step is to stop the lumbar drip that's going to be turned off. We're going to see where the spinal fluid leaks out of his head. We are hoping for little to no drainage out of eyes, nose, ears, or mouth. If we see the drainage again, the drip will just get turned back on to let the brain further heal. Just so you guys know, I've learned so much stuff here. The brain sits in a sac of embryonic fluid and brain spinal fluid. What is it? Central spinal fluid or something. And that sac has been ripped in certain areas, so it's draining all over for him. I would send a picture, but the picture is absolutely disgusting. But the short answer is my schedule. I'm at the nights with them. That way I'm in the market when the market opens. Keeve and I are talking as early as 4 in the morning because I'm up. That's when he goes for his CT scans in the morning. We see the market open. We've run our play. I'm missing the last hour to 2 hours of the market close, which Keeve is taking over for me as I start to get to sleep. Cerebral spinal fluid. Thank you, Todd. And hey, guys, again, I really appreciate the fact that I get to call you guys my friends. It's pretty amazing. Some of the other money managers, as I heard what was going on, it kind of filters through the grapevine, have given me calls. Hey, I'm sorry, you guys must be losing half your base. And it's like, no, we are we're here. We do what we do for our people. It's what it takes, and it's what we do. So the short answer is yes. And Bill, no problem. No problem at all. Yep, not a biggie. All right, any other questions you guys have? If not, I'm going to call it a night. We will do the best we can to get this uploaded by tomorrow. I appreciate you guys in general, just as friends. How can I can't say it any differently than that. Thank you guys for being amazing friends. And we will just go from there. You guys have a great evening. I will talk to you later. Bye-bye.